This video represents the items in our accounting workbook that we were not able to cover during our class. So before we work on those pages that we didn't cover, let's go back to the last page that we did cover and review it to have some continuity. Now, what I had mentioned to everybody was that sometimes the materials, labor, and overhead may be added to the production process, not in exact proportions to each other, but in different proportions. Now, let's use an example here. Okay, the description is, during the company's assembly process, 100% of materials are added at the beginning of the assembly process. That means everything gets added at the beginning of the assembly process in terms of materials. After that, we don't have to add any more materials. Okay, now it says conversion costs are added throughout the assembly process. So we can depict that by showing that throughout the entire assembly process, conversion costs, which include direct labor and overhead, are added to the product until it becomes 100% complete. Again, in contrast, materials, 100% of materials are added at the beginning of the process, and nothing else is added in terms of raw materials throughout the entire production process. Okay, now let's take a look at the example here. 100 units were added to assembly. If the physical units were then 50% completed, their equivalent units of production is. Now let's use the production process continuum chart that I drew up top here as an illustration. And again, you can see the product starts out at 0% completed and it ends up at 100% completed. Now again, what we said was 100% of the materials are added. In other words, all the materials are added at the beginning of the assembly process. So from the raw materials standpoint, in effect, the percentage of completion for that component, raw materials, actually is 100% as soon as we begin production. Now, what we can do then is, based upon that, when we calculate our equivalent units of production, we can say 100 units times the 100% equals 100 EUP. And that's the answer in this case. For direct materials, 100 EUP would have been produced as a result of this effort here. Now we take a look at conversion cost. And remember, conversion costs are added throughout the entire production process between 0% and 100%. So therefore, if the items are 50% complete, we can assume then that basically they've absorbed or they've incurred 50% of their conversion cost, or 50% of the combined direct labor and overhead. So now if we convert that to equivalent units of production, we can say 100 units times the 50% equals 50 EUP. Now the next question is, how many units must be expended to complete these aforementioned 100 units? So let's assume these 100 units are going to be completed. So how many EUP have to be expended? Okay, the first thing we're going to do is look at direct materials. And again, when we take a look at direct materials, what we're going to see is that 100% of the materials have been added. So there's no more materials that are added anywhere in the production process, 0% more materials. So we can say 100 units times 0% of additional materials equals 0 EUP. On the other hand, conversion costs are a bit of a different story. They're 50% complete at this point in time. Therefore, we're going to have 50% more effort to get to 100%. So we can take our 100 units times the additional 50%, and that gives us 50 EUP, and the answer would be 50 EUP. So we can see now that the different production components can be added in different proportions or different processes during the production process. So let's go on and do an accounting for our units of production. And what you're going to do is what you're going to see is this looks very similar to your other calculations where we basically accounted for the physical unit flow in a process, and then broke those physical units down between how they moved throughout the production process. So in this case, we see pretty much the same information as those previous pages. The difference we have now here is that now we've taken these two components that are costed differently, and we break them down as to equivalent units of production for materials and equivalent units of production for conversion cost. So let's go through this particular problem. During the company's assembly process, 100% of materials are added at the beginning of the assembly process, just like in that previous slide we just gone through. Conversion cost, on the other hand, which are labor and overhead, are added throughout the assembly process. Okay, now a company had a beginning inventory of 1,000 units in its assembly department that were 30% complete as to conversion costs. During the year, 10,000 units were transferred into the assembly department. At the end of the month, and we can say year, I guess we can say at the end of the year, there were 3,000 units still in assembly that were 80% completed as to conversion cost. Compute the EUP from this activity. Now notice I don't say percentage of completion as to materials, because we assume materials are added right at the beginning of the production process, so we really don't have to say what percentage of completion there are. But let's take a look at these physical units, the reconciliation here first. I need my beginning inventory. So I start off with the company had a beginning inventory of 1,000 units. There's my 1,000 units. Units transferred into assembly. During the year, there were 10,000 units that were transferred into assembly. So the total units I need to account for now are 11,000 units, meaning I started out with 1,000 units. I put another 10,000 units into my assembly, which means I need to account for 11,000 units. Now you remember from our previous presentations in class, when I take those total units to account for, I put them down under the total units accounted for under my physical unit movement when I have to account for the physical unit. So I have to balance to that number. Now I have information that I can plug in from my problem, and it says units completed from the beginning inventory. Okay, we had 1,000 units in our beginning inventory, so we assume all 1,000 of those units were completed. So we say units completed from the beginning inventory is 1,000 physical units. We're also given information of how many units were left in inventory at the end of the accounting period. In this case, there were 3,000 units still in assembly. Okay, so in this case, again, physical units, 3,000 units remained in assembly. So now all we need to do is solve for X in this case, which are the units started and completed during the month. So we have 1,000 plus X plus 3,000 equals 11,000. We do a quick algebraic solution in this case, and we know that's going to be 7,000 physical units. So we have 1,000 plus 7,000 equals 8,000 plus 3,000 equals 11,000. Now we need to go through the conversion process. And again, we have to convert materials and conversion cost separately because they have different percentages of completion. So units completed from the beginning inventory. Okay, the first thing we know is we had 1,000 units that were going to be completed. Now remember, our raw materials were already added at the beginning of the production process, and that was in the previous accounting period. So those have already been accounted for. So the additional materials that we need to complete these units is equal to 0% because all the materials were already added to these units. So we take 1,000 units times 0% equals 0 EUP. Now in the case of conversion cost, again, remember it said our these beginning inventory units were 30% complete as to conversion cost. That means we're going to have to perform another 70% of effort to complete them. So in this case, we take the 1,000 units times 70% required to complete, and we come up with the conversion value EUP of 700. Okay, now we go down to the units started and completed during the month. And as I mentioned, this is a great calculation because anything that's started and completed during the month or the accounting period, whatever you want to call it in this case, is basically, it's going to be 100%. We start at 0 and we end up at 100%. So everything here is 100%. So our physical units will be 7,000 units times 100% equals 7,000. Also in the case of conversion cost, 7,000 units times 100% is going to equal 7,000 EUP for conversion costs. Now we go to units remaining in inventory at the end of the month. It says there were 3,000 units still in assembly that were 80% complete. So here's our 3,000 units. Now, these units were 80% completed as to conversion cost. But again, remember, these units were started and they haven't been completed. They're remaining in our inventory at the end of the month. So they started out at 0 and they ended up at 80%. Now remember, for equivalent units of production for materials, anytime I start a unit, 100% of the materials are added at the beginning of the production process. So in this case, it would be 3,000 units times 100% of the materials, because that's all the materials are added right at the beginning. So that would be the equivalent to 3,000 equivalent units of production. Now the conversion costs are going to be a bit different. Again, 3,000 units that were 80% completed as to conversion cost. So we take our 3,000 units times 80%, because that's the amount of effort we put into them from our beginning to date in that month, and that's going to be 3,000 units times 80% equals 2,400 units. So equivalent units of production are going to total to 10,000, and our EUP conversion is going to equal 10,100. Okay, let's go on and do one more problem regarding computing EUP separately for materials and conversion. During the company's assembly process, 100% of materials are added at the beginning of the assembly process. So as soon as we begin an item, it gets 100% of the materials, and then there's no materials required after that. Conversion costs are added throughout the assembly process. A company had a beginning inventory of 15,000 units in its assembly department that were 20% complete. During the year, 20,000 units were transferred into the assembly department. At the end of the month, there were 8,000 units still in assembly that were 90% completed. So compute the equivalent units of production from this activity. So again, we have to go through our physical our physical production reconciliation here. We start out with beginning inventory, which said we had 15,000 units in the assembly process. So we add that 15,000 units as beginning inventory. During the year, 20,000 units were transferred into the assembly department. So we add that 20,000. So the total units that we have to account for are 35,000 physical units. And again, we're going to add that to the physical units that we have to account for in this inventory movement matrix here below. So here's my 35,000. Okay, now I can pick up the physical, I can basically compute the movement of my physical units based upon the information I have from my problem at the top. First of all, units completed from our beginning physical inventory. Okay, we're told there were 15,000 units in inventory, and as you remember, under first in, first out basis, FIFO, I assume all these units were completed and completed first. So I'm going to fill in my beginning inventory as the units that we completed those were the first units, 15,000. Okay, I'm also told how many units did we start and are still remaining in inventory at the end of the process. And in this case, that's 8,000 units. So I'm going to add those 8,000 units. Now again, I have a simple algebra problem. 15,000 plus x plus 8,000 equals 35. When I solve for x, I know that's going to be 12,000. So you can see 15,000 plus 12,000 is 27, plus 8,000 is 35. Now I need to convert my into equivalent units of production for materials and conversion costs. So I go back and I take a look. Units completed from my beginning inventory. Okay, if you remember again, 100% of the materials are added when I started production. So these are units that were already in process from our beginning inventory, in other words, from the previous accounting period. So we don't have to add any materials because 100% of the materials have been added. So we have to add 0% effort in terms of materials. So it'd be 15,000 units times 0% equals 0 EUP for materials. Now conversion costs, it's a little bit of a different story. Well, we said we had 15,000 units that were 20% complete. That means in order to complete the entire unit, I have to expend 80% additional effort. So the calculation is 15,000 units times 80%, meaning that we incurred 12,000 equivalent units of production, or units of effort, if you will, in terms of conversion costs. Now, units started and completed during the month. That means all these items were started and then completed during the month. So in this case, that means they went from 0% to 100%. So again, we count the physical units for materials and conversion costs at 100%. So there's the 12,000 units times 100% EUP for materials, and 12,000 units times 100% for EUP for conversion costs. Now the units remaining in inventory at the end of the month, and we can also see these were the units that we started during that in our production period, but we didn't complete them. They were still in our ending inventory at the end of the month. And we know there were 8,000 of those units, and they were actually 90% complete. So we almost completed them, but not quite. Okay, the first thing we're going to do is we're going to calculate the equivalent units of production for materials. Remember again, when we start a unit, we add 100% of the materials to that unit right away. So in this case, we have 100% of the materials added to all 8,000 units. So it would be 8,000 units times 100% equals 8,000 EUP. In the case of conversion costs, they're added throughout the production process. So we have 90% of the effort, or 90% of the costs that would have been added during the month. So it's 8,000 units times 90% equals 7,200 equivalent units of production for a conversion cost. Now we simply add the equivalent units of production for materials. That adds up to 20,000. And then for conversion cost, that's going to total 31,200. So now we have an idea of how we go about tracking what we call this theoretical movement of inventory. And the theoretical movement is these equivalent units of production, or basically the amount of effort that's going into different units and different parts of the movement of the inventory. Now somehow we have to, in order to move our costs from work in process to finished goods, we need to attach a cost to those equivalent units of production. Just like we, under job order costing, we attached cost to individual job orders in the case of process costing, we don't have individual job orders, so we have to come up with some type of unit that we can use and then come up with the cost per unit in order to assign that cost movement throughout work in process and then on to finished goods. So now we've talked quite a bit about calculating equivalent units of production. Now, if you turn to page 19 of your workbook, we're going to talk about how we combine calculating equivalent units of production along with cost to calculate the movement of basically products through process costing. Remember, in the case of job order costing, we were able to assign cost to jobs and move them through a work in process into finished goods that way. In the case of process costing, we move products between processes, and those products aren't differentiated. So we have to come up with this way of moving these items and valuing these items. So we use equivalent units of production, and we also come up with what we call a cost per equivalent unit of production. Now, if we take a look at page 19, it looks a little complex, but it's really not that bad. If you take a look at the item up here, you see this schedule here where it talks about physical units, EUP to materials, and conversion. And you can see here where it says physical units, we have a beginning inventory of 15,000, units transferred into assembly 20,000, total units to account for 35. And you see down here this reconciliation of inventory movement. Now, this information here shouldn't be that hard to understand, because what you just did was we performed this in our previous slide, this exact same information. The 15,000 plus the 20,000 equals 35,000 units to account for. And then the total units accounted for 35,000, 20, 31,000. All these numbers in here that we have calculated now appear on this next schedule. So this is the schedule from the previous page already completed for you. So this is our equivalent unit of production movements, if you will. Now, again, the information here at the top you see is in black and also blue. The information in the black is the information that already has come from that previous problem. And this was enough information to fill out this schedule down here. Now, the blue portion represents something that you haven't been exposed to before. And this talks about the cost flow within the department. The only thing we've talked about so far has been equivalent units of production. Now we're going to talk about cost flow into the department, the process. And here it says the company had a beginning inventory value of $480,000. During the month, the company incurred $240,000 of direct material cost. In other words, that's how many direct material costs were charged into this particular assembly process. Also, the total amount of conversion costs that were added to this particular assembly process were $624,000. So we add these into the assembly process at this point without even trying to account for any cost per equivalent unit of production. So those go into the general ledger. Okay, what we learn is products that are completed in assembly 1, which we just have here, are transferred then to assembly 2. So now it asks us to compute the inventory movement for the month of assembly 1. And what that means is the dollar amount of the inventory movement. So here's how we go about doing it. And again, it's a process. Okay, the first thing we want to do is we want to find out what is our direct material cost per equivalent unit production that we incurred during the month. Okay, the first thing we know is we incurred $240,000 of direct materials. We also know that we had applied 20,000 equivalent units of production for those 240,000. Yeah, I have that, and $240,000 of $240,000 of direct materials and 20,000 EUP of production. So the cost per EUP for direct materials, raw materials if you were, is $12 per EUP. So every unit of effort added $12 worth of cost or value to that process. Okay, now we're taking a look at conversion cost. Conversion costs were $624,000, and we take a look at the total amount of conversion effort in the month, and that was 31,200 EUP. So we take the $624,000 of conversion cost, we divide it by the 31,200 EUP, and it comes out to $20,000 or $20 per equivalent unit of production. Now we need to come up with our inventory reconciliation. And again, if you take a look at our inventory calculation here, beginning inventory plus our inputs minus our outputs equals our ending inventory. So we're back to the classical inventory flow formula. The first thing we want to do is we want to plug in the beginning inventory value in the general ledger. We're told that the inventory value is $480,000, so I add that to the general ledger, or I add that's the amount that was added to the general ledger. Now I want to understand is what are my direct material costs that I've added to my account during the month. And what I'd mention is I had $240,000 of direct material costs. Those were added to my my assembly work in process during the month. Also, conversion cost were $624,000 were added to my account. So the total production costs that were incurred during the month is a total of my materials and conversion cost, which equals $864,000. That's the amount that was charged to work in process for my assembly 1 work in process. Now in addition, I have my beginning inventory value, so the total cost I have to account for that have flown through, that have gone through that work in process account for assembly 1 is $1,344,000. Okay, now I've got to be able to subtract out the materials that are transferred out. However, I can tell you right now that number is not known. That is a number, that is the X that we're going to have to solve for. I don't know what that number is, but I do know the amount of inventory that I have remaining in the assembly department. So if I can calculate my ending inventory, I can always solve for X. So in this case, the value of my ending inventory in assembly materials cost, if you take a look at my materials cost, it's going to be for materials, it's going to be 8,000 EUP, units remaining in assembly, EUP 8,000 units. So it'll be 8,000 EUP, and the cost per EUP is $12 a month, or $12 per EUP for materials. So the total value that is in my ending inventory for assembly is $96,000. In the case of conversion cost, you can see I have 7,200 EUP in terms of my ending inventory units remaining in assembly. So it'll be 7,200 EUP times my conversion cost of $20 per EUP, and that equals $144,000. So these two items added together is the total value of my ending inventory in assembly. So I know my beginning inventory plus my input equals the total cost I need to account for, and I need to end up with $240,000 in my ending inventory. So all I need to do is solve for X in this case. And X in this case is going to be $1,104,000, because that's the amount that must have been, in terms of value, that was transferred out of assembly. Okay, now with that, let's go on to the next page and look at the general ledger entries for exactly what we did right here. Okay, I need to add a couple things before we go on. Sorry about that. Okay, now we go on to page 20 of the workbook. Now at the top, you can see this reconciliation of our inventory activity, and this is exactly the information we just derived from our previous slide. If you'll notice, total value of ending inventory 240, units transferred out of assembly 1,104,000. If we go back to this previous page, you can see it's exactly the same information. A little bit more detail here because I show you how I've calculated it. But let's go back here to the inventory activity so we can see beginning inventory plus our inputs minus our output equals our ending inventory. Now, if we take a look at the T accounts, what we did say is we had a beginning inventory of $480,000. We also had direct material costs incurred during the month that were charged to work in process. to 240,000. Those have already been entered. Then the conversion cost during the month of 624,000. Those are already entered in the work in process assembly. Now all we need to do at this point in time is, in order to remove the amount that's transferred out of assembly, we're going to make a credit to assembly 1 in effect for $1,104,000, which is at entry D, the $1,104,000, and the debit goes to work in process assembly 2, which is our transfer to the other account. And you can see here's our debit work in process, and basically there's an error here that should be a debit to work in process assembly 2 and a credit to work in process assembly 1. So again, I repeat, that should be a debit to work in process assembly 2 and a credit to work in process assembly 1. And what you can see here is, again, the $1,104,000 came out of assembly 1 and was debited into work in process assembly 2. So with that, that's the end of that particular example. Let's try another one of these inventory movement calculations. Now again, what you see here is the information in black is from a previous problem. As a matter of fact, it's the problem you did for equivalent units of production on page 17 of your workbook. So everything in black is from that problem, and the blue items are basically items that I've added regarding costs. Now again, what you can see is this is our physical movement and EUP conversion calculation. And again, you derive these numbers from page 17 of your workbook. So we're going to go on and do exactly the same thing we did for our previous calculations. We start out with direct material cost per EUP during the month. So we need to calculate what that is. So again, material costs were $130,000. So we take our direct material cost of $130,000 and we divide it by the total amount of effort for the month, 10,000 EUP for materials, and that comes out to $13 per equivalent unit of production. Conversion costs are going to be $303,000, and in this case it's going to be divided by 10,100 units EUP during the month. So 303,000 divided by 10,100 EUP equals a cost per EUP of $30. Okay, now again we start off with the value of our beginning inventory. Assembly 1 had a $43,000 cost in its beginning inventory, so we add that to our inventory movement calculation. Now we're going to add the direct material costs that were charged to our general ledger during the month, and the direct material cost again were $130,000, so there's $130,000. Our conversion costs charged to our general ledger account were $303,000, so we add that. The total of those material and conversion costs will come up to $433,000. And that means the total production costs that we need to account for now are $476,000. Now again, remember the X that I'm going to have to solve for is the less materials transferred out of assembly. So what I'm going to do is I'm going to calculate the value of my ending inventory in assembly. So I want to calculate the value of the materials cost. So I take the units remaining in my assembly, which are 3,000 for materials, 3,000 EUP, times my $13 per EUP, that's going to equal $39,000. Conversion costs then per EUP are going to be my 2,400 EUP for my units remaining in assembly for my EUP conversion costs, times $30 per EUP equals $72,000. So when we add these two up, the total value of my ending inventory in assembly based upon my EUP calculations is $111,000. So I have my beginning inventory plus my inputs of $476,000 and minus my outputs, which I have to solve for, equals my ending inventory. So in this case, when I do the simple algebra, it comes out to $365,000. So 43,000 plus 476,000 minus 365 equals 111,000. Now we're going to go to the next page and see how that works when we're working with our general ledger accounts. And in this case, again, you see from on page 22 here, you see the summary from the previous page on the inventory movement. So now we're going to record the inventory movement from Assembly 1 into Assembly 2 based upon this reconciliation. Okay, we know we have a beginning inventory of $43,000, and there it is in our general ledger account. That entry's already been made. Direct cost, $130,000. That's in our general ledger account. Conversion cost, also included in our general ledger account. So all those items have been incurred. Okay, now what we need to do is now we record the materials transferred out of assembly. This is the entry that we need to make to transfer the items out of the assembly department. And you can see it's $365,000, and you can see the entry down here. We credit $365,000 out of assembly 1, and we debit that to assembly number 2. And again, I've reversed these entries, unfortunately, but this should be a debit in work in process to assembly 2. Again, I repeat, a debit to work in process in assembly 2 for $365,000 and a credit to work in process assembly 1 for $365,000. And with that, that's the end of the presentation. Thank you for your time.